Quickly switching over, we'll go to domestic news. Credit deposit gap seems divergent due to the different bases, says RBI Governor Shaktikanta Das speaking at an event yesterday. The RBI chief reiterated that most high-frequency indicators show that the economy in India is growing. However, credit growth far away from economic exuberance is what he says. He added that monetary policy is guided by the movement in inflation and that actions of the US Fed was one of the factors guiding the domestic situation. Listen in to what he had to say.
The current 17.5% is on a low base of previous 2 years. There is a base effect which is also playing its role here. So it's on a low base. And second point, it is reflective of the underlying fundamentals of the economy, and it is also a reflection of the pent-up demand of the pent-up demand for credit of the last 2 years. So considering all these factors, I think the credit growth at the current point is certainly far, far away from what you call exuberance or something like that. It is definitely very, very steady. We are monitoring it very, very carefully.
Let's also quickly get in my colleague Ankur Mishra to talk about who said what at this meet.
Yes, in the minutes of meeting which was released, RBI governor has said that Indian economy is exhibiting resilience and is holding up well. Apart from that, other members, Jayant Verma has expressed disappointment once again on the stance part where Reserve Bank of India has kept the withdrawal of accommodation stance continuing in this policy as well. In that, he has mentioned that that should have been moved to neutral a long time back, and also he has mentioned that there should have been a pause in the policy. Remember, MPC has voted in favor of hiking repo rates by 35 basis points in the current policy, and while Jayant Verma has suggested that there should have been pause because most of the time the effects of the policy are known with a lag, so therefore this time there should have been a pause, and after that action could have been taken by a monetary policy committee. Now, as far as MPC's Ashima Goel is concerned, she has said that communication shocks continue to create market volatility, and she was referring to the current market volatility which has been pertaining in last few months. Apart from that, RBI governor has also mentioned that cannot remain entirely decoupled with the global spillovers, and that risk still remains for Indian economy.
Well, thanks for that summary, Ankur. But 2022, sticking with that theme, was a challenging year for the RBI and most central banks globally as well. And its governor, Shaktikanta Das, of course, had a challenging year. Will 2023, though, be any different? ET Now tries to break it down.
RBI governors rarely get an extension, but Shaktikanta Das has had an eventful 2022 after getting one a year earlier. The soft-spoken, affable governor negotiated the 2 COVID years with reasonable elan, but 2022 brought with it another set of challenges. Early in the year, Russia invaded Ukraine, and with the war came a raft of US sanctions. Russia was soon ousted from SWIFT, the global financial transactions mechanism. Later, the West would impose a price cap on Russian oil. The turmoil in both financial and commodity markets had an inevitable impact on the global economy's nascent recovery. As central banks scrambled to control rising fuel and food prices, Shaktikanta Das was forced to rethink RBI's monetary policy, which was in accommodative mode even as retail inflation had hit an 8-year high of 7.79% way back in April 2021. Central bankers across the world believed that rising inflation was a supply-side phenomenon caused by the pandemic and the war in Ukraine. Governor Das, like Chairman Jerome Powell of the Fed, opted to keep monetary policy accommodative in the early months of 22. The role of monetary policy, he believed, should be to ease supply-side constraints by keeping rates low to encourage investment and growth. Alas, what central banks failed to recognize was that monetary policy acts with long and uncertain lags. surplus liquidity and the Ukraine war were beginning to create a ripple effect. Both oil and food prices shot through the roof. Russia is a significant supplier of oil in global markets, while Ukraine is a major supplier of wheat and sunflower oil. Inflation was getting stickier by the day. Central banks changed tack with the US Fed raising rates in March. We were slower to react. Finally, in May 22, the RBI changed course. Rates were increased by 40 basis points, but surprisingly, the accommodative stance stayed. Unfortunately, it was too little, too late. RBI's hand was forced and it raised rates by 50 basis points at each of its successive meetings in June, August and September. December saw a more moderate 35 basis points increase. Come December, the rate was 6.25%, up 225 basis points in 8 months. RBI under Governor Das had to write a letter to the government explaining why the MPC failed for 3 consecutive quarters to keep inflation within the target range of 2 to 6%.
We will keep Arjuna's eye on the evolving inflation dynamics and be ready to act as may be necessary. Our actions will be nimble and in the best interest of the economy.
Retail inflation dropped to 5.88% in November, the lowest since December 2021. But it's facetious to attribute the decline to RBI's policy initiatives. Multiple factors are at play, including the fall in the price of oil and base effect. And it's too early to predict whether the decline will be sustained. Challenges remain in the form of a weaker rupee, falling forex reserves and disappointing industrial production. But Governor Das and India can surely look back on 2022 with a measure of satisfaction.